You probably heard this before. You need to invest your money. Cool. Great. Sounds smart. But how? Where? In what? Everyone's yelling something different. Crypto, stocks, gold, real estate. And somehow it all sounds either too risky or way too complicated. So you end up doing nothing. Or worse, you jump into something random and lose money. Most people overcomplicate investing. But the best way to invest your money, it's actually simple, proven, and beginner friendly. You don't need to be rich. You don't need to study finance. You just need a system that works and the confidence to stick to it. In this video, I'm walking you through that system, step by step. No fancy jargon, no get rich in 30 days promises. Just a clear path you can start today, whether you got $50 or $5,000. We'll cover where to put your money, how to grow it over time, and how to protect yourself from the most common mistakes. Because investing isn't about being perfect, it's about getting started the right way. So if you've been waiting for someone to break it down in a way that actually makes sense, this is that video. What makes an investment the best? So before we talk where to invest, let's get clear on what makes an investment good in the first place. Not hype, not what your coworker said at lunch, not whatever's trending on TikTok this week. We're actually talking criteria. A good investment does 3 things. It grows your money over time, it doesn't keep you up at night, it's simple enough to stick with. That's it. It doesn't need to be flashy, it just needs to work. So let's break that down. First, growth. You want your money to beat inflation. If inflation's 3% and your money only earns 2%, you're actually losing purchasing power. That's why we invest, to grow faster than the cost of living. Second, risk versus reward. Higher returns usually come with higher risk, but risk isn't bad. It just needs to be managed. A safe investment that makes you no money isn't helpful, but going all in on something you barely understand, that's gambling. So you want something with a healthy return and a proven track record. Third, simplicity. If it's so complicated that you never check it, or you panic and pull out the second something dips, it's not the right strategy. The best investments are the ones you stick to consistently, month after month, year after year. That's how compound growth happens. Now, does that mean there's one perfect investment for everyone? Nope. It depends on your timeline, your risk tolerance, your goals. But the best investments all share one thing in common. They are boring, repeatable, and designed to build wealth slowly. So if you're looking for the best way to invest, don't chase shiny, chase simple. Step 1. Build a foundation. Before you invest a single dollar, you need to cover your basics. Think of it like building a house. You don't start with a roof, you start with a foundation. And for investing, that foundation is cash and stability. Here's what I mean. First, an emergency fund. This is cash you can access fast, not tied up in the market, not in crypto, in your savings account. Ideally, 3 to 6 months of your basic living expenses, rent, food, bills. If your job disappeared tomorrow, this is what keeps you afloat. And trust me, the market won't care that you need to sell investments. Emergency always show up at the worst time. Having that safety net means you don't have to panic sell when life happens. Second, get rid of bad debt. And by bad debt, I mean high interest stuff. Credit cards charging 20% interest, that's financial quicksand. Investing while paying, that is like trying to fill a bucket with a giant hole in the bottom. Mathematically, it makes no sense. If you're earning 8% from investments, but paying 20% to the bank, you're going backwards. So what's the move? Pay off your bad debt first. Build up your emergency fund. Then start investing. You'll sleep better. You'll take smarter risks, and your money will actually have room to grow. This step isn't flashy, but it's what sets you to win long term. Investing without a safety net is how people get wiped out. So do it right. Lay the foundation. Then we build. Step 2. The best place to start. So where should you actually invest? If you want something smart, proven, and beginner friendly, start with index funds. An index fund is like buying the whole market. Instead of picking individual stocks, you buy a tiny slice of hundreds of companies all at once. Think Apple, Google, Microsoft, all bundled together. The most common one, the S&P 500. It tracks the 500 biggest companies in the US. It's been around for decades, and it's delivered about 10% per year on average. That's massive, especially when you let that compound over 10, 20, 30 years. The best part? You don't need to be an expert. You don't need to guess which company will win. You're investing in the entire economy. And historically, the economy grows. Index funds are also super low fee. No manager trying to outsmart the market. Just steady, reliable growth. Most active investors can beat the market anyway. That's not my opinion. It's backed by data. Over time, index funds win. So if you're new to investing and just want to do it right, skip the hype. Start with the S&P 500. Simple, powerful, proven. Step 3. how to start. Now let's make it real. How do you actually start investing? First, you need a brokerage account. Think of it like a digital wallet where investments live. You've got a ton of options. Just make sure it's legit and has no sketchy fees. I've added some options in the description. Once you're in, you'll choose the type of account. Then comes the fun part, automation. This is where your future self wins. Set up automatic deposits. Decide how much you want to invest weekly or monthly, even if it's just $50. Then pick your investment and buy in automatically. This is called dollar saving averaging. It helps you avoid bad timing by spreading out your buys. No emotion. No guessing, just consistency. That's what builds real wealth. So don't try to time the market. Build a system and let time do the heavy lifting. Now, if you're wondering what else is out there beyond index funds, let's touch on that next. Bonus, other solid options. So index funds are your best starting point. But what else is out there? Let's talk about a few solid options you might explore once your foundation is set. First, real estate. Buying property can build wealth, but it comes with bigger risks. You need more money up front. You deal with tenants, repairs, taxes. It's not passive, but if you do it right, rental income plus property value equals long-term gain. Just don't jump in because your cousin made money flipping house. Do your research. Next, ETFs. These are like index funds, but you can trade them like stocks. Super flexible. You can find ETFs that track industries, regions, even commodities. Then there's a target date funds. These are designed for retirement. You pick your target year, like 2050, and it adjusts risk over time. It starts aggressive, gets more conservative as you get closer to retiring. It's basically autopilot for retirement investing. Great if you want something totally hands-off. So are these better than index funds? Not really. Just different. You can explore them later, once you've mastered the basics. For now, stick to simple, build consistency, then expand from there. So what is the best way to invest your money? It's not about timing the market. It's not about chasing hype. It's about building a system that works and sticking to it. First, build your foundation, emergency fund. Pay off high interest debt that gives you peace of mind. Then, start investing in index funds. Keep it simple. Use a brokerage you trust. Automate your deposits. Dollar cost average into low fee funds. Over time, that money will grow, compound interest will kick in, and you don't need to stress every market dip. That's the power of long-term investing done right. Once that's rolling, you can explore more options. Real estate, ETFs, target date funds. But don't start here. Start strong. Start smart. Now, I want to hear from you. What part of this process are you in right now? Just getting started? Already investing? Trying to get out of debt first? Drop a comment and let me know. I'll be there with you. And if this video helped you simplify things for you, hit that like button. Subscribe for more zero fluff financial content that actually helps. You've got the info now. Time to take action. You got this.